Welcome to weekly market research from Fullerton Markets. Let's dive into the latest market trends and insights. S&P 500. Inflation is back in focus on Wall Street, as this week's CPI, Tuesday, and PPI, Thursday reports could determine whether the Fed cuts rates in September. A quarter-point cut is widely expected, but hotter-than-expected inflation could fuel stagflation fears and stall the rally in the S&P 500, which is near record highs. August's seasonal weakness, high market valuations and geopolitical risks, including tariffs, US-Russia talks, and China trade deadlines add to volatility concerns. Fed independence is also under scrutiny after President Trump fired the BLS chief, nominated a potentially dovish Fed governor, and continued pressuring Chair Powell. Markets closed higher this week, but strategists warn a 5% plus pullback remains possible before summer ends. SPX USD on daily chart. The S&P 500's breakout above 6,150, a long-standing resistance zone, has turned this level into critical support. As long as price stays above it, the bullish trend remains intact. A drop back below 6,150 could signal a failed breakout and trigger a deeper pullback. With key economic data ahead, this zone will be the market's main battleground. Bitcoin's historic 4-year price cycle, driven by halving events, may be ending as institutional investors, spot Bitcoin ETFs, and friendlier regulation reshape the market. In past cycles, new highs came 12-18 months after halving, followed by 70-80% crashes. But in 2024, Bitcoin hit record highs before halving, boosted by ETF demand. Experts say future drawdowns will likely be smaller, 30-50%, due to long-term holders and institutional inflows. Supportive macro conditions and regulation may keep volatility lower, and if Bitcoin does well in 2026, the classic cycle could be considered broken. BTC USD on daily chart. Bitcoin remains trapped between major support at 110,000 and resistance at 120,000. After failing to hold above the upper barrier, price has pulled back but is attempting a recovery. A breakout above $120K could open the door to new highs, while a drop below $110K would shift momentum in favor of sellers. Gold price fell from a record $3,407 to $3,398 after the White House said it will soon issue an executive order to address misinformation about tariffs on gold. The drop followed concerns from the Swiss Precious Metals Association, which warned that the US's 39% tariff on Swiss exports could harm the global gold trade. US Customs recently clarified that 1 kilogram and 100 ounces gold bars from any country, including Switzerland, the world's largest gold refiner, are not exempt from these tariffs, raising fears over disrupted international gold flows. XAU USD on daily chart. Gold remains in a consolidation, with key resistance at $3,430 and strong support at $3,170. Price has repeatedly tested the upper boundary without breaking through, indicating heavy selling pressure. A decisive breakout above $3,430 could trigger a bullish rally, while a drop below $3,170 would turn the bias bearish. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets,